All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We're going to get started with our analysis and let's get through it. Like I said, we got retail sales today. Finally, some non-political data that might actually move the needle. We're going to see the health of the consumer in October. Excuse me. Which, like I said, excuse me again. Let me grab my coffee. Hold on. Okay, I'm back. All right. So the euro, the euro hit the 127% extension. We're bouncing from there. I think, and by the way, my stupid um, internet fuzzed out yesterday while I was at the dentist, and so I didn't save my charts. So I'm gonna have to redraw all the charts from yesterday. So if it looks like yesterday I did a bunch of stuff and then it's all gone, well, it is. That was my fault. I should have saved it before I left. I ran out the door to get to the dentist and didn't even think about it. So anyway, so I'm redrawing everything. So the euro dollar, here's the 127% extension. This is the move yesterday. We were looking for a move down to the 107 level. We got it. Now I think we're pretty much range bound in between the 108.50, 108.50 and 107. I thought we might be able to get a little bit lower, but the dollar index was so close to 100 that I just figured, this is going to be it. This is going to be it for now. Should the dollar index break above 100 or not 100, 100.40, which is actually the key resistance for the dollar index. Until that happens, the euro is probably stuck here. Now, I did buy the euro yesterday. I did. I actually bought the euro dollar at like 36, 107.36. I sold it at 107.49. I shorted the dollar yen yesterday at like 108.28, exactly where we're at right now. I cleared out of it at like 108.07 or something on the Lunch Money webinar. I tried playing the dollar counter trend. It's tough. It's a tough trade. It really is. If you're trying to, so in other words, if you're trying to buy the euro dollar, which I did yesterday, it's a tough trade, man. It comes right back in your face really fast. So I did it. Shorted the dollar yesterday, made a few bucks, and I stood aside because it's a challenging trade at the moment. So I'm just not doing it. I'm not doing it, not right now. All right. A move to 108.50 would be great. I think it would be awesome because that would be a good level to be on the short side of the euro dollar. All right. I believe we are in a bearish bias. Support right now is 107. And if we clear 107, that's probably, in my opinion, that is going to, launch us towards the, really key resistance in the dollar index. I don't know if we're going to do it. I'm just saying that if we actually break down through here, through this support, I think that's going to be extremely bullish for the dollar. All right. All right, let's go over the cable. Now, the cable's down. Paulie said there was a report on how UK is not ready for Brexit, and but I would have thought, again thinking out loud here, I would have thought that would actually be bullish to cable. Oh wait, you're not going to do the Brexit, so fast? Oh, fantastic. All right. Anyway, but the pound, is also down on CPI data. I mean, when you live in a world where inflation is starting to rear its ugly head almost everywhere, and then the UK CPI data comes in flat or weaker. Sorry, I'm meaning to yawn here. It comes in weaker. That is probably pretty concerning for cable bulls. Now, we also hit 161% extension. You guys knew that. I'm going to remove that now. we have really what I would consider pretty major support down here at 103.25. This has to hold for bulls, all right? And I don't even have any cable exposure right now. I don't even have any pound whatsoever on any crosses or anything. But I had to just double check that. Um, if the pound comes down here and hits like 123.25, that might be an area to, even if you're not buying the pound dollar, maybe you start looking at the pound Aussie or the pound New Zealand. You know, if this can hold, okay, that support can hold. Resistance now, you think about it, we're at 124. We've fallen from 126.75. I'm just trying to figure out where there's going to be sellers now on rallies, because anybody who's stuck long up here is probably a little concerned. You know what I'm saying? Anybody who's long up here is probably going, oh, dude, if I can just get a rally back, and it's a pretty severe downtrend line, and it's pretty clean. So that means that if we can get above 124, by the time we get there, about 124.65, we might get a little squeeze. So 124.65 is resistance for now. Okay, we are in a range in the cable. We are. Okay. All right. Let's go over to the Swissy. So the Swissy, what a rejection yesterday, right? What a rejection at parity. I mean, we hit parity and then boop, and then take a look at us now. I mean, eh, I I'm going to say this right now. I would be really scared being short the dollar Swiss right now. I really would. This dollar Swiss looks like it wants to launch higher. Look at it. Look at this thing. I mean, that thing. Yeah, let's get rid of this. We don't need that anymore. I'm just trying to see what we need here. Um, don't need that. Don't need that. I mean, yeah, you look at this Swissy, I sure as hell wouldn't want to be short this thing. I'm going to have to put down parity, and then also for support, I'm going to have to just put these lows here. I mean, we're not even dead. Well, yesterday we wrote down 99. I guess I can still write down 99, but this thing looks bullish. It's obviously pretty key. Okay, pretty key. It's in a range, but you know, looks like we can break out again. I mean, it really does. Like I said, I wouldn't want to be short. I have no Swiss exposure right now, but it looks like it wants to just lift above parity. And if it does break above parity, I mean, that's a pretty massive move. I mean, we spiked down to 95.50 and we're already back up at parity right now. You know, if we clear this parity, it's gonna be really tough to stop. Okay. Steven asked, could the dollar Swiss be the carry trade of the year? Hell yeah. Dude, if this stock market takes off because, Donald Trump's doing all this stimulus and spending, and stock markets really start to cling on to that narrative, and the market starts to really rally. Yeah, I mean, think about buying any currency, selling Swiss francs. It's a hell of a carry. Jeffrey asks, what do you mean by parity? Parity is one for one. Parity is $1 for $1. It's right there. Parity for the euro would be, 700 pips lower. Parity. Okay. Dollar yen. I mean, look how bullish the dollar yen looks. This thing looks super bullish too. I mean, here, I'm gonna get rid of this stuff. Again, I'm removing a lot of stuff that I did yesterday, but just take a look at this, massive move, 161% extension. We aren't even, I mean, this is the exact same move basically, right? I mean, it looks something like that. I mean, we just look like we're about ready to launch again. Again, I don't have any yen exposure. If I was short the dollar yen, I'd be a little concerned here. The next big level for us beyond where we're at right now is this 38% retracement. That 38% retracement comes all the way back from the highs in 2015 to the lows this year. 38% retracement comes in at 109 and a quarter. So you have to imagine that's where we're going to go should we break through these highs. So these highs are 108.55. So we got 108.55. Beyond that is 109.225, right? And it's bullish. Support 107.75. So as long as we stay above 107.75, you're not going to take the bullish spin off of this thing right now. Okay? Just ain't going to happen. Ooh. God. I bought some Aussie New Zealand a little while ago. It's like, do I stay with it? Do I? You know what? That's what I'm gonna do. I'm gonna get out of my. I have a Euro New Zealand long that's just been kind of stagnant. I just sold my Euro New Zealand long. That's what I did. I'm just reducing a little bit of New Zealand exposure because we have so much New Zealand data today. I'm short the New Zealand Canadian. I'm short the Aussie Canadian, and I'm up a little bit. I'm long Aussie New Zealand, and we have dairy auction results and New Zealand retail sales today. So, I just sold my Euro New Zealand that I was long, and it was just a small position. I didn't make very much, but I'm just kind of reducing a little bit of New Zealand exposure ahead of tonight. I don't, it's kind of like, do I really need all this New Zealand exposure ahead of all this stuff? Anyway, okay, stand with what I've got. What was I doing? Oh, so we did this, the yen. Let's go over to the Canadian. Okay. So the Canadian, we've had a really strong move in crude. My fear right now about the Canadian is we just didn't sell off. I thought, okay, well, if crude, and by the way, this is here, let's get rid of that for a second. We don't need that. I don't want that either. Delete that. Okay, so we stopped here That's the 50% retracement. Now, if you didn't know that, that was the 50% retracement from this high. Here, let's get rid of this too. We don't need that. From the high back in 2016 to the low of 2016, we're at the 50% retracement. Great. We stalled there. With crude rallying, I thought, man, this dollar Canadian is going to get a big rejection from this level. I thought we'd already be trading back down towards 134. I really did. What's interesting is that we haven't fallen that much with crude. I mean, we've had a massive bounce in crude, and we just haven't seen this big pullback that I was expecting. Now you have to think that on a pullback here, we might not get as much as I was expecting. Um, I think we'll be lucky if we get back down to this 134.30 area. Take the low here to the high. 50% retracements, 134 and a quarter. That's gotta be support there. 134.25. Resistance is actually 136. I mean, it's bullish, even though it might be pulling back a little bit. But if crude rolls back, if crude rolls back over, I mean, this thing might launch into new highs again. Let's get rid of this. Okay. Let's go look at the Kiwi. So here's your Kiwi. Now, the Kiwi is walking a very fine line at the moment. Let's get rid of this for a second. Let's get rid of that. Okay, and let's get rid of some of this stuff. Again, I deleted all this stuff yesterday. I just didn't save my charts, which is very frustrating, but that's all right. I love doing work twice. Doing work twice is so fun. I love that. There's nothing more than I hate than wasting precious time doing crap twice. It's just there's nothing more that drives me bananas. I've always prided myself to be a very efficient person. My wife knows I am. I don't muck around. It's like I get what I need to get done. I get it done and I move along. And I get very frustrated when I have to do things like twice. Anyway, okay. So here we are. Um, um, actually, everybody's been asking, hey Blake, is this a big head and shoulder pattern? It may be. I mean, it could be. You know, could be a big head and shoulder pattern, possibly. But listen, I hate these little heads. You know, because it's not normal. Because how many people do you see that looks like that? How many people do you see with just like this little beep 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 head? I mean, does that happen all the time? No, most people actually have a pronounced head. So you get a shoulder, head, shoulder. It actually looks like a human being. This, not so much. You know what I mean? So I don't get super excited about these where people go, oh look, it's a head and shoulder pattern. It's like, what? Look at that little head. You know what I mean? So it might be, I guess. Regardless. I'm not excited about that. Okay. Scott says you were so picky. I am. Dude, if you get sloppy with your analysis, you're going to get sloppy with your P&L. You understand that? Cliff, did you just say buy dollars on dips? What happened to you? What happened to Mr. Sell every dollar rally that you can find? You change your tune. All right. So everybody's allowed to change their mind. All right. This is going to be key. The 127% extension of this move is 70-20, which is big, 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 big. Okay. It's huge, huge support. If that gives way, all hail the chief. All hail the chief. So now, any rally in the Kiwi, you know me, I'm always trying to short the Kiwi. Like right now, I'm short. I have 3 positions, and 2 of them are short Kiwi. Yeah, well, sue me. It's even hard to identify. Now remember, we have New Zealand retail sales, and we also have dairy auction results today, which could greatly influence what we're doing here. But for right now, I guess we'll probably have to just look there, which is 71.40. 70. What was that? Wait, 70. 70. It is bearish. You guys know that. Okay. I'll be back in a few minutes. When I come back, we'll do the Aussie dollar index, peso, Swedish krona, Norwegian krona. Don't go anywhere. All right, good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you back. My name is Batman, Fat Man. Luigi said it. I didn't say it. Luigi said it. It's all Luigi's fault. Batman, Fat Man. Too funny. Too funny. All right. Batman, Fat Man. What was it? Oh, we got to do the Aussie. All right, Aussie dollar. Here we go. All right, so this Aussie, again, I got to remove all this stuff from yesterday, so just bear with me. Now we had this AB equals CD, blah, 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 yada, yada, yada. Fact of the matter is with the Aussie, you guys know the Aussie broke false breakout to the upside, which now leans to the short side. In my opinion, the Aussie dollar is just waiting to break down. That's it. And the way I'm taking advantage of it right now is through the Aussie Canadian. But that doesn't mean that I won't short the Aussie dollar either, because I will. I just haven't done so yet. You see this 200-day moving average. You see that support. That all comes in at 75. You can say roughly 75 cents. I think 75 cents is just a good, if the Aussie clears 75 cents, I will find a way to short it. I think I told you guys that yesterday. It doesn't like if we break through 75 cents in the Aussie, I'm going to short the Aussie like several different ways. Whether it's buy the pound Aussie, buy the euro Aussie, I'm so already short the Aussie Canadian. I'm gonna, sell the Aussie dollar. However I got to do it, I'm just gonna do it because I know this is such key support. Okay, because we had this false breakout. Everybody thought, oh, copper's breaking higher. I got to get long copper. Oh, when I get long copper, the Aussie dollar is going to rally too, so I got to get long the Aussie. So that was like the natural reaction is to get long the Aussie. Well, unfortunately, if you're long the Aussie right now, you are not getting paid at all. All right. Now, if the Aussie rallies to 76 cents right here, see this? Oops, thought I grabbed it. See this? Okay. If we rally to 76 cents, I'm a seller up here, somewhere up here. There. Heaven forbid we get to 76 cents. I should. Okay. 76 cents should be key resistance, and I would be a seller there if we can get it. I say it's bearish because we did I think it's more just a matter of time now. We've false broke. Now it's just a matter of time before we break down. Can you, here, let me put it to you this way. If you shorted the Aussie right now and you close your eyes for like a couple weeks, I think you'll make money, right? Like I think if you short the Aussie, a couple weeks later, we're going to be down here somewhere down here. I believe that wholeheartedly. Now, does that mean that I'm just going to short the Aussie and just walk away? No, of course not. That would be stupid because we might rally to 76 cents first and then sell off, which would give me a better place to short it. But my opinion is the Aussie is on borrowed time now. It's just a matter of time. Matter of time. Like I feel comfortable shorting the Aussie. I'm not short the Aussie US dollar right at this moment, but I would have no problem with it if I shorted it. Like I wouldn't sweat it. I'm not going to. We got to get past like the retail sales. I mean, we got to see how gold does. There's a lot of things that I have to factor into this decision making, but I'm just telling you guys. Okay. So, Batman. Dollar index. Here's your analysis. I'm just going to take a break. All right, here's the dollar index. Here's your candlestick analysis. Here's your basic technical analysis. Here's your harmonic analysis. Here's your Elliott wave analysis. Okay, we're done. Let's move on. Joking. All right. Dollar index. See, that was my easy way out. That was my look, I'm gonna cheat. I'm gonna cheat on my morning analysis this morning. All right, so everybody knows we're up against 127% extension and also against major resistance. Let me give you my spiel yesterday for those of you that weren't around. So with the US dollar, I feel that we're going to break out. I want to be long the dollar. I just obviously being long right up against, resistance here doesn't make a whole lot of sense to me. But I will tell you, if the dollar breaks out and I'm not long, everybody's going to be scrambling to buy dollars because the dollar, we got a 2-year consolidation and everybody's been quote unquote bearish, which still surprisingly never made sense to me. As our central bank is raising rates and every other central bank is doing quantitative easing or keeping rates low or cutting rates. So, and now with Donald Trump in the White House, we know you can call him the inflation president. Okay. He's going to do a lot of infrastructure spending and blah, 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 blah. Rates are going to go higher. Bonds are telling you that. But go look at your 30-year bonds and you tell me the rates aren't going higher. They're going higher now. You know, if you got a mortgage at 3.5%, congratulations, because you'll probably never see that again. Mortgages are probably going to go back up to 5.5, 6%. And if you own any real estate, values are going to come down because they have to meet, affordability index, which is going to be a lot lower when rates go up. So, as rates go up and inflation starts to go higher, the dollar is going to just benefit from that even further, as the Fed has to play a little, warding off inflation game. So it's only, to me, it's going to break higher. It's just, do I buy the dollar right now? This doesn't make logical sense just to buy it right at this moment, especially if the dollar might have, a couple of weeks of consolidating here before it moves higher. I believe that any move down to 99.20 is a long, that's, as I told you guys yesterday. If now the question is, are we even going to come down here? That's the real question I have right now. I mean, if you look at intraday, just here's an hourly. I mean, dips are just being bought pretty aggressively. I mean, you look at this is just Swissy, or just looks just like the Swissy, right? Look at this damn thing. Look how bullish it looks. Covington said Trumpflation is the term I heard on Bloomberg. Trumpflation. It might be it. This article we sent out, a couple of investors are betting that Trump will be the inflation president. This came out on Friday, November 9th. I guess it was Thursday. I mean, that article it's a good one. I mean, but it's true. I mean, he's going to spend. And yeah, so what was I doing? Went the wrong way. Anyway, so the dollar is looking pretty bullish. The dips are very shallow. Dip to 99.20 would be great. I just don't know if we can really expect it right now. 99.44. Oops, I'll write 99.45, 99.45, and then 100.40, right? Is that what the highs are here? 100.40. Let's go over to the daily. $100.27, 100.47, so 100, 100. I'll write 100.50. This is key, because see, if the dollar index actually breaks that, then the whole market has to chase the dollar. The whole market, because I'll tell you, people are under-own the dollar at this moment. Scott, it gets updated throughout the course of the day. Yes, how often does we update Forex Analytics? Not the blog. The blog is just a blog. I mean, that's the free stuff. We update our analysis like throughout the course of the day. Everything gets updated at least once a day, but a lot of stuff intraday, depends on the day. All right. Let's take a look at the peso. U.S. dollar Mexican peso is coming off. I actually sold some pesos, and I covered my short this morning at 42. So I already covered it. Now here's the thing about the peso. I want to be on the short side of the peso. I don't know where the right place is. I'm a little worried that if the market gets risk averse, then we're just going to break right through these highs. I think right now you play 20 to 21.40, and any move above 21, I'm a seller. But I know it's a very wide I know it's a very wide range, but obviously the peso is like silly volatile right now. So you just have to be really careful. You got to buy extreme dips, in my opinion, or sell extreme rallies. Like I would be a seller above 21, and I'd be a buyer down here at 20. I can't do anything while we're right in the middle. That's why I closed out my trade. I'm like, yeah, I'll just take profits and sit on the sidelines for now. Um, US dollar Norwegian krona. Now, see, this is a more pronounced head and shoulder pattern. Even though it's still ultimately in an uptrend, but it's more pronounced. See, this is a lot nicer looking. Big head, shoulder. Because the reason when you get these pronounced movements, it really can squeeze people because people get stuck short down here, and that's what creates the squeeze higher. Um, right now we have we have support back at 840. This dollar Swiss looks like it's going to go. Damn it. And I'm not long. Kills me. All right, resistance right now. Let's figure this out. Yeah, that's a 618 is 860. I think you just got to be careful here because if crude sells off, this thing's gonna just pounce higher. Oops. It's bullish. Let's go over to the Swedish krona. We can't stop. This thing just continues to launch higher, and I'm not long, which just kills me. Every time I look at this thing, I'm just like, how do I not buy? How am I not buying this? How am I not buying the dollar Swedish krona? Ever since we broke 888, I know it's choppy, and it's like how, but every time it lurches higher, it's like, how am I not long? I just so dips are being bought down here to 905. I mean, we can write down resistance is 920. This thing is just, it's bullish. What can I say? Oops. 9.05, 9.20. There you go. Your bias chart's done. Questions?